In this video, we are analyzing 3 earnings reports from last month that caught my attention. Since markets typically overreact to recent news, these situations often create meaningful opportunities, whether that's buying quality companies at temporary discounts or selling positions that have been bid up beyond fair value. We'll examine the critical numbers, review what management and analysts are saying, and see how the market responded to each report. To help us quickly navigate all these data, we'll be using Forecaster, today's sponsor, that provides all the essential metrics and informations in one centralized platform. Let's start with Palantir. And we can see that just after they announced their financial results for last quarter, the price jumped up from $160 to $186 in about 4 days. So let's figure out what triggered this spike. First, let's go to raw data. Revenue went up by 20% and 38.8% when we look at year over year. So that is an absolutely incredible growth. Net income went up by 88% year over year. With such results, I'm only surprised that the stock price didn't jump even higher. Now, let's take a look at the balance sheet. Cash and cash equivalents are down from $993 million to $930 million, so that is not a meaningful drop. Total debt is down from $245 million to $238 million, and the net debt is still negative. So they have more cash than they have debt, and that is something we always like to see. This shows security and stability. Now, let's try to put some perspective to these numbers by using the AI feature of Forecaster. Let's go to transcripts and earnings call highlights. So Palantir surpassed $1 billion in quarterly revenue for the first time. Overall revenue grew by 48% year over year. US commercial revenue surged by 93% year over year, and US government revenue grew by 53% year over year. Customer expansion. The top 20 customers now average $75 million a year in trailing 12-month revenue, up 30% from a year ago. They closed 157 deals worth $1 million or more, with 66 deals worth $5 million or more, and 42 deals worth $10 million or more. So a lot of new projects are opening. And they were awarded a $218 million delivery order from US Space Force. The Maven Smart System contract ceiling was increased by $795 million. A 10-year enterprise agreement with the Army totaling up to $10 billion was awarded. That is some really great news for the company. And when it comes to risks, we can read that the transcript mentions the standard disclaimer regarding forward-looking statements being subject to risks and uncertainties. So at least when it comes to the management view, the situation is absolutely beautiful. Okay, that was pretty impressive. Second financial report that I found really interesting last month was Petrobras. After this Brazilian oil and gas company announced its results, the stock went down from $13.08 to $12.12. That is a 7.3% drop in one day. So let's take a look at those results. Revenue went down by 19.8% and almost 28% year over year. That is not a pretty picture. Net income is down by 51.7%. When we look at year over year, it looks great, but let's move 4 quarters to the left and we see the reason. The income was negative, so it is not really a great achievement. Now let's go to the balance sheet. Cash and cash equivalents are down by $1.6 billion. But what is really important is that the total debt is significantly cut from $64.5 billion to $34.8 billion. That is a very meaningful change in the right direction. So now let's try to understand a bit more about this company and its situation. When we go to Forecaster AI Agent, we can find a lot of interesting observations. The ones I found most valuable are increased dividend announcements. Despite earlier financial challenges, Petrobras announced a substantial dividend of $1.6 billion, indicating strong cash flow and commitment to shareholder returns. The dividend yield remains attractive at around 12.66%. And Q2 earnings miss. While production levels were robust, the company reported lower than expected earnings in the second quarter, primarily due to fluctuations in oil prices. The earnings per share fell short of analysts' expectations. It is also worth taking a look at the full analysis of the company and concentrate on the competitive advantage of Petrobras. So we have here brand recognition. Petrobras is a well-established and recognized brand in the energy sector, particularly in Latin America. Cost advantages. As a large integrated oil and gas company, Petrobras benefits from economies of scale in its exploration, production, and refining operations. Its extensive infrastructure in Brazil provides a significant cost advantage in the domestic market. Intangible assets. The company holds valuable patents and proprietary technologies related to deep water oil exploration and production. Okay, so that is Petrobras. And the final company that caught my attention after publishing its financial results was Mastercard. Price first went down a bit, but after initial reaction by the market, it came up again in a big way. So let's look at some numbers. Revenue is up by 12.1% and 16.9% when we look at year over year. Income is also increasing, 12.8% from last quarter and 13.6% when we look at year over year metrics. When we look at the balance sheet, we see that cash and cash equivalents went up from $7.5 billion to $9 billion. And what is also very encouraging is that the net debt went down from $11.2 billion to $9.9 billion. So all these numbers just reinforce my belief that it is one of the best companies in the world. But let's use the power of Forecaster's AI to find out more. And if you would like to analyze thousands of companies that you can find on Forecaster, I would really appreciate if you would use my affiliate link in the description below. By using the code BOLD10 at the checkout, you will get a 10% discount and you will be also supporting this channel at the same time. So thank you Forecaster for sponsoring this video. Okay, so here we can find a quick overview of the news about Mastercard. Analysts' upgrades. Mastercard received multiple upgrades from financial analysts. Strategic partnerships. The company has announced collaborations aimed at enhancing its cross-border payment solutions, particularly in the United Arab Emirates, which is expected to expand its market reach and revenue potential. Robust earnings. Recent quarterly earnings reports revealed a solid performance, with earnings per share surpassing estimates. Analysts have revised their projections upward, reflecting confidence in the company's growth trajectory. And finally, innovative solutions. Mastercard is continuously innovating with new product launches, such as the first real-time B2B travel payment control through its wholesale program, indicating its commitment to adapting to market demands. It is very hard to find any meaningful problems or risks for Mastercard at the moment. No wonder the price is just going up and up all the time. Now, if you enjoyed this video, you may also find my ranking of top 10 ETFs very interesting. Thanks for watching and see you in the next one.